Today I'm gonna give you a secret to trade gold in 5 minutes. Yes, literally a secret. I'm gonna explain in just 3 steps how do I look at gold trade in 5 minutes chart with a proven track record. The only thing I want from you guys is full attention, because attention is the key. As soon as you pay attention to the full length of this lesson, once you finish, you started to see those candlesticks that I look at in trading gold 5 minutes that you see every day I'm doing in the live. So before I begin this, as usual, make sure that you smash the like button, hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. Okay, traders, so I'm gonna explain you now step by step how I look for best trade on gold in 5 minutes, and then I'll take you to the real chart to see quite a few real trade examples so that you understand straight away, and as soon as you finish, you use in your trading to trade gold that I do every single day. Now, first of all, as you can see, gold in 5 minutes, first step is higher time frame area of value. So anytime higher time frame means, as we are trading on the 5 minutes, a higher time frame could be 4 hour, daily, weekly, monthly, any kind of higher time frame when gold in an area of value. For example, daily 20 EMA, 4 hour 20 EMA, or on a trend line on a support or resistance when gold in that zone. To find out where it is, this is the first step. Once you see that gold in an important area of value, next step is step down to the lower time frames, such as on the 5 minutes that we are discussing. Then look for a reversal pattern on that lower time frame. As an example, let's say gold is, this is a higher time frame, any kind of support or 20 EMA or any kind of trend line where the price is likely to reverse. Okay, I'll show you real chart example. As I mentioned, just try to understand first explanation. So once you see that reversal, it could be a head and shoulder, inverted head and shoulder. So if it is in an uptrend, then inverted head and shoulder or double bottom or a consolidation. I'll show you quite a few examples. So once you see that a reversal pattern, the third step is to look two-step liquidity. This is the most important part of this strategy. Now, as you can see that once the price has formed an inverted head and shoulder, this is the 5 minutes candle, and you can see that the first one has crossed a couple of candles low. There was you could see a lower time frame trend line, okay, in an uptrend, in a downtrend, the other way around, and you wait for that price to cross that trend line, that candle completely, couple of candles break that trend line, and then grab liquidity and then close above. As any kind of dodgy bullish engulfer, it's not important to see the color and shape of the candle. The most important is for the price to break that lower time frame trend line or the level, and then closed above, grabbing liquidity. And then this is not starting, and then you need to wait for further to see that gold market to continue to move in the direction. And the next step, again, wait for another liquidity grab, second time crossing even the previous liquidity candle. This is the first liquidity candle. You can see that it has crossed the trend line, grab the liquidity, form that candle, and then wait for another candle to cross that one as well. Okay, the first liquidity grab, and then to close above all those candles that you have seen so far, crossing all of them, either creating a long wick candle, bullish engulfer, pin bar, doji. The key points here is to second step liquidity grab, and once you see that this is where the entry point, going long, stop loss below all this liquidity grab, and then taking trade with at least 2-to-1 reward to risk ratio rate trade or more based on the current time price action. This is the simplest way. I trade gold every day along with many other strategies. So now let me explain to you on the real chart how to find this kind of trade, guys. As I mentioned that this is a simplest way to understand gold, so make sure that you stick till the end to understand everything I'm explaining here. Okay, today so we'll be looking at this trade on gold 5 minutes. Now, as I mentioned that what I'm showing is proven, back tested. Now this is the trade that I have sent out to the VIP students, and also it is a YouTube live trade. You can see on the screen with entry, stop loss and take profit, and this is the 3-to-1 reward to risk ratio gold trade. Just in 5 minutes time hit the full profit target on this one. Now I'm gonna show you now exactly what did I look at in that trade so that you can copy straight away. Now first of all, let me replay this chart. When I was on YouTube live, you have seen that what did I look at, what have gone through in my mind, so that you can understand it. Now you can see that once the price has broken down with this liquidity grab from this resistance level with this 5 minutes candle, I was looking at the chart. Now this is not what we are talking about so far, because we need, after this breakdown, a reversal, a consolidation pattern. Now this is a very important area of value. This is the first step to look at the higher time frame area of value. Now if you look at the 4-hour time frame, you can see that once the price has broken down to this level, this is where the 4-hour support zone, okay, has broken. Back to back, you can see one candle has closed, the other one started. It's an important area of value. The price initially has gone up and then has come back down again to the same level, giving a very important level of support. So on the higher time frame, you found an area of value. Now on the lower time frame, if you go to the 5 minutes, you can see that on that support that you saw on the 4-hour, exactly aligning with this 5 minutes time frame. So if you draw that level here, you can see that how the price is reacting to that level. Now the next step for us is to form a pattern that could be a consolidation pattern, could be an inverted head and shoulder, could be a double top, double bottom, as I mentioned. So you saw that there is an impulse and the price consolidated in that zone. Now this is the first candle that has grabbed liquidity from this resistance. You can see that back to back 2 candles on the 5 minutes has formed a trend line. So in our first step, if you review, once you found the reversal pattern, what is your next step? Is wait for that price to break the local trend line. If you go to the 1 minute chart, you can see a big trend line that has formed in that zone. Now the price has broken that resistance level on the 5 minutes and then grab liquidity crossing. You can see it has crossed all this high and closed as a candle that has a liquidity. Okay, this is where the retail trader get confused, that thinking that okay, there's a bullish engulfer on a support, I'm gonna long, and this is where the institutional trader just take the other way around. So to be a profitable, one must trade like an institutional trader. Now we saw that after crossing the back-to-back 2 candles high, the price closed below. Now the next step is to wait for that level to be broken as well. So let's look at what happened. Now you can see that this is the next liquidity candle. Now the next liquidity candle could come straight away, or you need to wait for a couple of candles, or you need to wait for even a structure to form. The point here is to find step 1, the area of value. Step 2, first liquidity candle. Step 3, second liquidity candle. Now this is the second liquidity candle where I called short, and also I have opened in my live account. You can see on the screen that I made profit from the trade with a high risk to reward ratio. Now once the trade is called, and you can see that the market straight away in just the next candle has given us full 3 times profit target on this one. Simplest way to trade gold market. Now let's look at the next example so that guys you can understand it straight away as soon as you finished watching this video. Okay, so let's see this example. This is also a gold trade, a great trade that we have opened just recently. You can see all the entries, stop loss and take profit, also sent to the students who are trading with us. Now let's see what did I look at on the trade that has given such a big profit. So I'm gonna replay the chart to see exactly what did I look at on the trade when I have entered. Now as you can see, the market started to, after this liquidity grab, there was a first of all impulse here. Now where is the area of value? Let's draw this level here and then go to the 4-hour time frame to see the area of value. Now you can see that this is an impulse on the 4-hour with this big liquidity grab, followed by we have seen another long wick candle. Now with that long wick candle, with this structure, the price has formed a very important level of resistance here, because this is the structure of this resistance, an important area of value. Now with that resistance, with this green candle, the price has completely broken out of this resistance, giving a very important area of value for a potential move to the upside. Now once we found the area of value, step number 2 is to go to the 5 minutes time frame. Go to the 5 minutes, and you can see that from that area of value, the price, first of all, a doji. Okay, this doji, if you closely look at, you can see that, let's stretch that level, and you can see exactly that that doji in fact a liquidity grab. Now if you closely look at, you see that this market has grabbed liquidity with this doji. This is a narrow doji, very narrow doji. Now once you saw that narrow doji, the next liquidity candle is to wait for that price to break that liquidity candle as well. And you can see that this is what exactly happened. The price has come back down, breaking all this low, and then closed above as a bullish engulfer. Huge liquidity grab happened in this strong bullish market. Once you see, the next step is to go long. This is what we did in the academy, that once the price has closed that candle, has come down for a pullback, we have entered the trade with 3-to-1 reward to risk ratio. And as you can see, as soon as we open the trade, the market didn't look back. It has come down little bit for a pullback, but at the end of the day, it has gone up and has given us the full profit target that we need. As you can see, before coming here, it has gone up, and even we could take a bigger profit target on this one. You can see this is a very powerful, even 5-to-1 reward to risk is possible when you know exactly how the market moves. Okay, today, so let's look at this example. This is another incredible trade. So first of all, let's look at on the daily time frame to see an area of value. So as I mentioned, that you can find area of value on daily, on 4 hour. These are the 2 time frame best to look for area of value when trading on the 5 minutes. So as you can see, this is a daily 20 EMA. Gold has hit the daily 20 EMA. If you draw a circle here to see the area of value, so let's jump onto a 5 minutes time frame to see how the price did with that area of value. Now if we go back to the 5 minutes time frame, what we see that exactly in that circle, this is where the daily 20 EMA has touched by gold, and with that daily 20 EMA retest, what we have seen that gold has formed a typical inverted head and shoulder. Okay, it's a very visible inverted head and shoulder. Now with that typical inverted head and shoulder. Gold has broken out of that inverted head and shoulder. So step number 1, you found area of value. Step number 2, you found a reversal pattern. Now the step number 3 is to look for two-step liquidity gap. So let's find out that one, starting with that inverted head and shoulder. The next step is to look for the price action confirmation to give you that liquidity candle. Now see that there is a liquidity candle here, okay, but we will not be trading because we need the first one and the second one to cross that first one too, but we haven't found any candle yet has crossed that liquidity candle. Now we are watching and until this one, okay, we see that liquidity candle. You can see that this is the liquidity candle, the most important one. Why? Because if you closely look at this liquidity candle is a long bullish engulfer. So let's replay the chart so that you understand it clearly. Now we saw that first of all it has crossed a doji's low, grab the liquidity from this bullish engulfer. You are still not trading because we need a candle to cross that one too. So if we play the chart, now we found the candle that we are looking at that has crossed the second liquidity candle and again closed back above into the range in the direction of the trend, and also after this reversal pattern. So 3 steps fulfilled. The next step is just to go long with a proper risk management, stop loss below the second liquidity candle and targeting 3 to 1 or 2 to 1 reward. To this one I will take 3 to 1 because it's bouncing from an important area of value. Highly likely the price will move in the direction that we expect. Exactly, the price hit that 3 times profit target on this one. I strongly believe that you found value in this incredible winning strategy, and also if you want to know more about this kind of strategies and also trade with me in a private group every day, then also you can find a link in the description area. You can visit the website and also you can see the website address. Visit the website, join us to learn our strategies and also to trade with us in our Forex Trading Wizard Academy to become an independent, professional, profitable trader. Thank you. I'll see you soon in my next lesson.